What's up, team? Okay, so in today's video, I really wanted to detail some of my favorite futures trading strategies. And if you don't understand or know about the futures market can be incredibly profitable, and it gives a huge edge to retail traders because there's no PDT rule, you get instant settlement, and you can short. And so that leaves traders open to take advantage of short positions, momentum with no PDT restrictions, plus more. And so in today's video, we are detailing my favorite strategies in the futures market, so be sure to stick around. Before we take a look at any of that though, if you want to help support our channel, don't forget to hit the like, hit the subscribe button below, and make sure to hit the notification bell. We day trade live on stream for free every single weekday morning right here on YouTube. And so with all that said and out the way, let's take a look.
Okay, so the first thing I want you to understand and realize about trading the Q or the broader market, or really any large cap, is that some days the market trends well and other days the market does not. But if you look at the market, you can see most of the time, if you look at where the volume weighted average price, the VWAP, is, which is this purple line, you can see most of the time stocks actually maintain really nice and obvious trends, especially large caps and other ETFs like this. Another clarification here is that when I trade the mini or the micro, I always look at the SPY chart. It's simply more clean, it's easier to gauge the volume weighted average price, the VWAP, and it's just easier to identify the trend, even though it's kind of trading the same thing as opposed to the E-mini chart. And so I always look at the SPY chart, and that's what I'm basing the strategies off today as well. Now, when we look at this, you can see most of the time, like this day, we have a nice upward trend. This day, most of the day, we actually maintained over the volume weighted average price. This day, we had half of a day of a choppy trend and then half of a day of a downward trend here. But I guess the point I'm trying to make here is that most of the time, the market is actually trending in a specific direction. You can use the volume weighted average price to identify that trend or direction and then attack it with your trading. Now, at the same time though, the market also has days where it does not trend well. If we keep going back here, you can see occasionally we're going to get a day like this where the market is just not favorable. It's just kind of chopping back and forth sideways over and under the volume weighted average price. And so if we push too hard on these specific days, we will lose money. We're going to lose money if we attack this sideways trend. And what that also shows us about these type of systems is that we have to have certain risks and limits in place for our trading systems that can help us avoid getting stuck in this type of chop here. Now, my favorite way to do this is just to give myself a maximum amount of time I can attack a specific trend. And so if we're going up and we pull back to the volume weighted average price and I get faked out on, and then we start going down and then we bounce back to the volume weighted average price and I get faked out there as well, then that makes me stop trading altogether and wait for a break on one of the upper or lower ranges here. Now, once that range break generally happens, we're going to get a nice move. You can see if we look at the Q here, we had this sideways up and down trend. Once this range broke right here, you can see the range right here. Once this range actually broke and we held this level as resistance, we had a much more obvious big move down that we can capitalize on. And so one of the biggest things you can do to avoid the choppiness is simply wait for that range to break and then attack it in that specific direction. And so if we're going to look into these strategies, you have to understand that some days they're simply not going to work. Most of the time the market trends in a really nice direction, but occasionally we are going to get some chop, and most traders can make money pretty easily on the days where the market is trending well. But when we get these choppy days here, they can't stop their trading, and so they have these really big drawdowns in their account that again are avoidable if you build a good system in place. So before we take a look at these strategies, just remember there's always risk involved with any type of trading, especially in the futures market as well. The market is not always trending well, and if you're going to attack some of the strategies I'm about to mention, you need to have risk measures in place to where you can avoid the chop, wait for the favorable days, and then set yourself strict limits in order to avoid the choppy days, if that makes sense. So with all that said, let's take a look at the strategies. Okay, so for my first strategy in today's video, I'm looking at the basic generic VWAP Bounce. And this strategy can be really powerful on the E-mini or the micro E-mini. What you need is days that are actually trending really well. And so you can see the SPY here, this entire day it maintained over the volume weighted average price. And so on days like this, it's usually a pretty safe bet to wait and buy the pullback to that volume weighted average price, essentially betting that the trend is going to continue. Now, this strategy can be really simple. You just have to have a good risk reward system in place. My favorite way to do this is to specify a really obvious support or resistance level underneath the volume weighted average price and then use that as a risk. And so if the stock breaks below the volume weighted average price, where you're essentially buying it up, and it breaks under that big support or resistance level that we drew, in this case we can look at the SPY at 410. If it breaks under 410, that's my sign to cut the trade and move on, and then maybe attack a downward trend if it continues to break down there. But again, having a really tight stop in place can have a lot of success with this specific strategy, because a lot of the days the market or the E-mini or the micro E-mini is going to be trending well. And so if you can basically bet that the trend is going to continue, it's usually a safe bet, especially if you have a tight risk measure in place. The next strategy on today's video is a breakdown, a green to red move in the E-mini or the micro E-mini, and this can be incredibly powerful because waiting for a stock to break under the volume weighted average price, as you can see here, and then really hold resistance once it moves back up to test the VWAP, that can just be a really powerful sign that the downward trend is starting, and waiting and then just kind of shorting into that previous resistance level right here, right around the volume weighted average price, attacking it until a breakdown happens is usually a pretty safe bet, and it's honestly one of my favorite strategies to wait for an attack in the market. A key with this one is you really have to wait for the right signals here. You need to wait for it to hold resistance at the VWAP when it bounces up to test it here, because if it doesn't, a lot of the time it's just a choppy trend and it'll move back up and start testing these highs up here and just fake you out a lot. But if you can wait for a sign that it's holding resistance, as you can see on these tests right here, and then attack that downward trend in the E-mini or the micro E-mini futures market, it can be really powerful and profitable. The next strategy I wanted to go over is a range break. Now, we talked earlier about how choppy trends can cause big drawdowns in a trader's account, but today I'm looking at how to take advantage of those type of choppy breakdowns. Now, if we look for a sideways trend, this is actually a strategy I back tested in a previous video, and I'll include that video in the description if you want to see what that back testing looked like. But when we find a stock that has a sideways range like this, it's really risky to trade while it's in this sideways range, but waiting for that range to break and then looking for the stock to hold support or resistance once that break happens is a powerful strategy that I use on an everyday basis. And so on this example, on the SPY or in the futures market, the E-mini, you look for that sideways range to break, and then you can see once it actually held resistance a few times here, bouncing up and then kind of getting rejected back down, that's a huge sign that the downward trend will continue. And so we had the sideways range, and then we got the breakdown, and then looking for that and attacking the downward trend, as you can see when we zoom out, can have a huge upside potential here. And it's one of my favorite ways to trade as well. It doesn't just happen on the short side. If we look at another example here, you can see this one was sideways ranging as well. Again, what we're waiting for is a break on the upside or downside of that range, and then a support hold in this case if it's on the upside, and a resistance hold if it's on the downside. And so you can see we broke over that previous upper range there, and then we actually held support. Once that happens, I love to attack the trend in that specific direction. Again, if we zoom out here, this would be the upward direction, and it held that trend all the way up until much later in the day. Here's another example of the exact same thing on the upside again. Again, we can see the sideways range, and if you draw it, you can see the VWAP chops right through it. It goes directly through that, and that's how you know we're in a sideways trend. But once the range on the upside breaks and we actually hold support, that gives me the green light to attack the upward trend in this situation. And again, it held that upward trend all the way until much later in the morning. And so it can be pretty reliable. Nothing is 100%. And of course, I can't guarantee these strategies will work for you as well. But these are some of my favorite strategies to attack in the futures market. And so I hope you can learn a little bit in how I specifically trade the futures market. And if you have any suggestions for these type of videos, let me know in the comments below. Also, I know one of the inevitable questions I'm going to get is, where can you trade the futures market? There's a lot of different places. Most major brokerages offer futures trading, but my favorite place for new traders to learn is through Topstep. Topstep funds traders in the futures market, and so they give you a demo, and if you can hit their target while following their rules, they'll fund you between $50,000 up to over $100,000 in funding with an 80% profit split in futures. Now, even if you don't get funded, I think it's a really important thing to learn and grow So in this way, you can have some pressure on you to succeed, but not the full amount of a real account to where you're a brand new futures trader risking $10,000 or $20,000 or more. And in this way, it's less than $160 per month if you use my 20% off link, and I'll include that link in the description so you can kind of test yourself in the futures market before diving right in. Now, with all that said though, good luck in the market, guys. Remember, I can't guarantee you're going to make money in any market, especially on Topstep or the futures market as well. It takes a lot of time to learn these things. It doesn't happen overnight, and really paper trading or trading with demo accounts or just trading with small size can have a huge benefit to your trading. And so just remember to take it very, very slow. Nothing is guaranteed, and good luck. We'll see you all next time. Thanks for watching, team.